So, plenty of uncertainty in the land of smiles. Let's get some more on this. And Dane Chamorro is the region's managing director at Control Risks. He joins us now from Singapore. And, what does Thailand need to do to grow its economy? More structural reforms or a good campaign, PR campaign, to remind the world that its beaches are open for tourists and business?
Good morning, Elaine. Well, it's probably a bit of both. They've been doing the second one pretty aggressively, both with respect to foreign investors as well as tourism, as you mentioned, which is a big chunk of the GDP. But fundamentally, in the long term, what they need to do is improve their education system, and that will help them kind of leap to the next level. It's not unique. Thailand's not unique in that sense. So long term, we're quite kind of bullish on Thailand. Because of its location between China and the ASEAN Economic Community, which is coming this year, also because it's really the only ASEAN country that has an industrial base. But in the short to medium term, they're going to face some headwinds, as your report pointed out. Not least of which is to do with politics, but that's not the only issue. There are some external demand drivers that have been weak. So about 40% of Thailand's labor force is in agriculture. When commodity prices are low for rice, for rubber, they're directly affected by that. And Thai households have a lot of debt, so about 80%, 85% of GDP. So the domestic demand drivers and the external demand drivers have been weak. And you couple that with the political situation, and as a result, as you said, they're facing the economic situation, growth less than 1% of GDP, less than 1% last year.
Well, how much of the drop in Thailand's GDP can be blamed on its political instability?
Obviously, there's been, that probably last year particularly was the main culprit, if you will. And then, as you said, it came back this past quarter a little bit stronger. That's because of things like the government fast-tracking some Board of Investment projects that had been stalled because there was not a Board of Investment functioning for a number of months. They're starting to implement some infrastructure plans, which are going to be multi-year, obviously. And also they were able to pass a budget, and so that always helps. And so really, for the near term, what Thailand's going to have to rely on for the next year, maybe the following year, is government spending. That's going to be the big domestic demand driver. And if they can actually disperse the funds that they're talking about, and particularly in the infrastructure and rail sector, then you're going to start to see the growth pick up. But I would be surprised if it got really north of 2.5% growth this year. I think Bank of Thailand was estimating 4%. They revised that down from 5%. I think that's probably wildly optimistic. So if they did 2.5%, I think this year they'd be quite lucky.
The ruling junta, though, doesn't seem to be worried about the numbers. They're calling it expected. In your opinion, what message does that send to investors if they're not that worried about it?
Well, I think if you look behind the scenes, they are worried about it because they realize that one of the things they need to do to be successful, quote unquote, is to drive economic growth. And so I think what you're going to see is them focusing a lot on these infrastructure projects. A lot of that will be funded by China. Thailand does have a unique geographic location, as I mentioned, between China and the rest of ASEAN. They're going to build out their infrastructure, particularly the rail infrastructure, which they desperately need. Infrastructure in Thailand has been underinvested, particularly in the rail sector and telecoms and a few others. And that will connect them to their neighbors, to Laos, to Myanmar, to Cambodia, and to China in a much more direct way. And that's why I say in the long term, I think Thailand has a great economic future ahead of it. It's the short to medium term that they really need to focus on.
How does Thailand stack up right now with its competitors, its ASEAN competitors, the Philippines and Indonesia?
Yeah, it's a good question. As I said, Thailand has the only real sophisticated industrial base in ASEAN. So if you look at petrochemicals, heavy industry, automobiles, white goods, electronics, Thailand has all of that, and they have the supply chain and, largely speaking, the infrastructure to support it. Their biggest problem right now is labor skills. They don't have enough people, skilled laborers, which is why I mentioned the education system. So Japanese companies, and they've been traditionally the biggest investor in Thailand, have a hard time expanding in Thailand because they simply can't get the people. And so as a result of that, for the lower end things, they've started to look at other countries like Indonesia. For some of the electronics, they've started to do a lot in Vietnam. So that's an immediate skills issue that Thailand has to address. And the other economies in ASEAN are growing well because of the good macro management. Certainly true in the Philippines, it's true in Indonesia. Indonesia has a big domestic economy, similar to Thailand, although much bigger than Thailand's, and so it grows on the back of that. So they really, fill different niches. And I think, what you'll see this year as AEC, ASEAN Economic Community, kind of formally comes into being, you're going to see more companies in the region, based in the region, start to exploit those niches across ASEAN.
All right, Dane Chamorro, Managing Director of Control Risks, thank you so much for joining us from Singapore.